What's up, guys? It's Thursday, April 13th, 2023. Wanted to make a video real quick about some things we saw in the market today. We had a pretty big green day today, right? Which makes sense. Right now we're just like this here, we're just chopping along. Got a little bit extended into resistance, so I expect a pullback here coming soon. But let's look at a few things. Get all this stuff off of our charts first. The first thing, we talked about the 365-day moving average that nobody really talks about. It was interesting to see where we stopped today. I mean, you can't make this stuff up, right? I didn't make this up. It's like almost right on it, right? Can't make that up. And this has moved over time, but basically we know 365 was support, then resistance, right? So that will be very interesting to see what happens tomorrow. Because there's two options. There's always two options, and usually there's three, and the third one I never think of till after it happens. It's possible we open above the 365-day tomorrow, and or Monday, and then we just keep going, right? A lot of people are talking about the this head and shoulders pattern. So let's do some math real quick. Because you kind of have this head and shoulders type thing, right? 1, 2, 3. You could arguably say, so let's say that was our neckline there, 50%. Hold on. 50% move from there would be, pretty good move up if we completed this move. Let's put a line there and see if there's anything important up there. So that would be a move from the bottom there to the neckline, and then from the neckline to the top you have an equal move. This move is equal opposite, right? Oh look, what do you know? That's crazy. So is it the end of the world tonight? Probably not. It would make sense if they completed this move up here to SPX 4320. SPY would put it at probably this line right here, 4332 SPX. Come up a little bit short, 429. So that's possible. Another thing we talked about before, we said whatever happens on the 6th is what the end of the month ends up doing. So let's take a look at here. Let's find a 6th. There's no 6th in that month. October 6th. There's no 6th in that month either. It doesn't have to be on the 6th, but so kind of starting from this year anyway, trend has been whatever the candle closes on, you're gonna kind of be in a bearish month. If it closes green, it's going to be bullish, right? That's kind of been the trend. Here's the 6th was reversal day, reversal. So it was kind of in a bearish trend. April 6th was bullish. So we would assume that, it's going to continue up higher to this 43.20 area. Obviously probably not tomorrow, but it's possible. So here's something interesting. I was yelling about the VIX today. This is VIX on a weekly chart. If you switch over to logarithmic, here you see this trend line that has held since 2017. And when it touches this, it usually marks the bottom and the volatility spike, right? You got this one and you get COVID. This one you kind of did, but this one marked the top of the market, right? November 2021. November marked the top of the market basically. And obviously it doesn't happen overnight. It happens about 5 weeks afterwards. I've kind of noticed here, like give it a couple weeks and then it kicks off. So, but even here, we touched this one on January, the first week of February. I look over here, the first week of February, that was the top there. Now we are back up there already. So, but what's interesting is where we closed today. And this is a weekly candle, so it doesn't really matter yet today. But it's interesting that we stopped right there at the trend line. The idea is every time we closed below 18, we tended to gap up the next Monday, right? VIX gapped up and SPY gapped down the following Monday. So that's kind of the plan going into next week. So I wanted to make the video tonight because tomorrow at the end of the day, as long as VIX is, down here somewhere, I'm going to swing puts and we're going to get a move back to the 2045 area, possibly up to 23, right? Every time we touch this, it kind of marks the bottom. So in the next few weeks, 4 or 5 weeks from here, so this will start climbing back up. This is a leading indicator. This will start climbing back up. And when we find out that 2045 is support, just like these few times, that's when we're going to see our big volatility move, right? It'll be interesting because this is going into earnings, and that could definitely do it. And we'll get into those. I'll start doing my research and telling you where things are going to go. It's pretty easy. It's really easy, actually. If you go to Netflix, is going to be the first one. All you do is you zoom out on a weekly and you say, where does the stock want to go? Like just looking at it, just no lines or anything. You take off all your stuff and you say, okay, for earnings, where does this stock want to go? And you look at it and say, well, we're at the 50 right now, so it's not going to gravitate toward the 50. It could just do nothing, right? But we want to look at stuff and say, okay, so where are other large places of liquidity? Well, there's kind of nothing down here, so they're probably not going to go anywhere down here. There is a little bit right here. We've already done that though. We got this area. We've got this big area of liquidity. We got this big area of liquidity. So it just, to say this is an area they want to go. This is an area they want to go, which is where they already are. They're already at the 50, so they don't want to go there. And then you could argue that down here is another liquidity area. This one probably not so much. But so here's your big giant moves. You got 520 area, 360, 180 area. And then you say, okay, from there, you know, we're above the 50, so that's bullish at the moment, right? So we go out to the monthly, say, well, on the monthly, the reason we're here is because that's the monthly 50. So it's very possible if we close above on earnings, if we get above here, then we could spike it, right? If we stay stuck under here, then all of these sellers are going to sell during earnings and drop it back down to here. So we'll look into that later, though. That's not a big deal. Not yet. Let's get back to talking about important things. So, that's wrong. Yes. So we've been talking about. There's kind of the stars are kind of aligned here for two things: either a major recession, or the recession's over. Right? It'll be interesting to see where they close the month out. But we've got kind of this area, right, that's been resistance. Every time we get over it, it's been resistance. And not necessarily the same day, but the following weeks has been resistance. So the expectation right now is this area is going to be resistance. So we can squeeze and go higher and all that kind of stuff, but at the end of the month, that's going to be resistance. The only reason it wouldn't be is if we can close this month above this area, and if VIX closes a week or a month below this line, that could very well signify the bear market is over, and you know, if we break down from here, we'll find support at 14 area, but that would be super risk off, or risk on, I'm sorry, super risk on, because that means there is no volatility in the market and stocks can only go up, right? If we did that, I mean, it would just be, it would shoot, well, our first target would be here, 4,500, but I mean, we'll be at SPY 5,000, S&P 5,000 quickly. So the other alternative is this line holds like it has for the last 5 years, and we start to climb back up. And if we start doing that and we see that 2050 is support again, look for a very large volatility move coming. And the reason I think that is because look at this, I'm jumping all over the place because I didn't make any notes today. Recession market cycle chart. Let's go back to this. We've been talking about this chart for a while. So what performs during going into a recession? Information, financials, communication, consumer discretionary. Right? This is going into a recession. Let's go back and look at, where's that other one at? Here it is. Technology, discretionary, communication, and industrials. As we're going into a recession, right? Not coming out of a recession. Going into a recession. Into a full recession, these stocks outperform the rest of the market. Well, let's look at here what happened today. Technology, communications, consumer cyclical, discretionary, right? These are outperforming the rest of the market. There's a conundrum, if you will. If you look at how the S&P closed today, because we know, because Apple, right? Apple makes up 3% of the S&P. Microsoft makes up 3%. I think Amazon makes up 1%. So Apple had a huge day and pushed SPY up, broke out above this area, right? Which is bullish. because they could come and rest here for another day tomorrow and just chop sideways and then continue higher, right? That would be the expectation at this point. I would kind of be shocked at this point if we took out this entire day, because I just don't see that happening anymore. That's why I kept saying over and over, don't let me buy puts, don't let me buy puts. Oh well. But if you compare the S&P to the rest of the S&P, so this is an equal weight S&P 500. This is where everything is an equal amount, where Apple's not 3%, right? It's just 1/500th or whatever it is. If you look at this chart, that had an inside day. It still had a green day, but it had an inside day. And it is quite a bit weaker than SPY, right? SPY is up here. They broke out today. SPY chopped around and broke out. This one has, a lower high. So that's something to keep track of. If you look at Dow Jones transports, so this is a daily chart. Here's the daily 50. I'll take these off. This is the daily 50 EMA, right? It's resistance. It's resistance. They came up and touched it and sold off. Now they climb back up, but that's pretty bearish, right? They're also, they have, I'd say, equal highs there, but double top. Transportation is important because transportation is what gets all of the items that are in the S&P 500 to the consumer. So you want to look at this one and say, okay, we got major resistance in this area, right? Every time they get over it, they end up selling off. Sell off, sell off, sell off, sell off. Got above it. It started to make it support, and then they sold off. Now they can't even get up to it. That's weakness. So there's relative weakness, and then also you got this trend line here. What was support is now resistance, right? So you got Dow Jones transports are falling while the S&P is going up, and that doesn't make sense. It's a conundrum, or whatever you want to call it, a divergence, whatever you want to call that. Talking about that, look at Boeing dropped after hours today. I don't know, some bogus news that, whatever, just dropped out of nowhere. It's not even earnings yet. But it's interesting because normally transports should be leading the S&P, not the other way around, right? Because transports, let's look at like FedEx or something. I haven't looked at these yet, but so FedEx is still hanging in there right now, but look for a pretty good drop on that one to retest this area. This might be a good Monday trade. 224. It's hanging in there, but it could easily drop underneath that line. So watch FedEx short, UPS. This is something you could do Friday before the market opens. Just go short on UPS. Same thing. We got resistance here. They got above it, but now it's back to resistance. Resistance again. Let's look at the daily. Daily's hanging in there, but we got, support here. Some chop. Resistance. This is an area of resistance above this area. So you could probably get away with UPS puts and FedEx puts. Let's look at other ones. UAL maybe. I don't know what these trend lines are. Oh, I don't know. That's kind of invalidated now. But, so you kind of got this area of resistance, and now we're falling away from it. So UAL had a bad day when the S&P was pushing higher and made a new high. That should be a warning, right? Anyway, you get the idea. So the idea is that the fundamentals in the market do not tell the same story of what SPY is doing. SPY was just, squeezing today because so many people went short. It's just a simple greed thing, right? And from here, let's look at ES. We're talking about this new tool thing. Oh gosh dang it. ES. This new tool thing I've been using. I was on the wrong side of it today, but that's okay. Let's look at this guy. Bookmap. So here's some more liquidity today. It wasn't here this morning. 41.50 guys showed back up. 41.75 area, and now we have a 4,200. So that's interesting. Still haven't quite figured out how to use this tool yet. But anyway, so you've got a very large seller right here at 41.77, let's say. You got 41.55 as a large area, so let's put a line there. This is for tomorrow. 41.55, which is, about right there. They could come back and retest that and bounce higher. They're probably going to gravitate towards that overnight. And then we had one at, what did I say, 41.77. That's this guy. That's this guy. So it's possible that they knew there was some liquidity back up here, and they thought it would be hilarious to just, shove the market back up. But then now we have a new guy at 4,200. So that's very possible to get back up there and put in another high. But overall, it doesn't match. You got technology, communications, consumer cyclical is telling you that we are going into a recession. Industrials, let's look and see if we're there yet. Caterpillar had a pretty good day. However, they're kind of in a bear pattern. This one. So industrials really aren't taken off yet. My favorite stock. Oh yeah. Look at that. It's coming. So people are starting to go to safe stocks again, right? Here would be a heck of a move. Watch this. Shoulder, head, shoulder. 100% retracement. Would be somewhere around $75 for Coke. That'd be a pretty good one. See, Coke holds up just kind of like Apple did. It looks the same pattern. Coca-Cola, long. Going into the recession. Buy Coke and prepare for a recession. Anyway, I just wanted to point that out today. I saw that at the end of the day, and I thought, man, that's crazy. So tomorrow we got banks. We got JP Morgan. Let's look at JP Morgan for earnings. It's before the market opens. So zoom out. Look at the big picture here. So we're at the 50 already on the monthly. So that's not really a target they want to go to. Let's look at the weekly. They're at the 50 on the weekly, but they're under it. They're flagging underneath it. On the daily, they're underneath it. So for earnings, let's pick out areas of liquidity they might go to, which is too late for this anyway, right? But so you got some liquidity up here, 137. They could rocket back up. They could rocket back up here. or you've got an area right here. They've already filled the gap, so they don't need to do that. They've got some liquidity. So I think we took 115 puts for like $5 or something like that, didn't we? I don't remember what I did. But I wouldn't be surprised if we open up tomorrow and we're down here at 115. It's Thursday, April 13th at 8:34 p.m. You can quote me on that. We'll see. We'll see what it does. Anyway, don't worry about that. I just want to make a warning video that we're going into a recession for still, and I wanted to Google watch this word, mild recession. That'll start showing up soon. The interesting thing will be if the Federal Reserve says it. A lot of people in this area are talking about recession. That's interesting. Oh, what do you know? District of Columbia, #1, is talking about a recession. That's interesting. Anyway, I hope I confused you more than I helped. And let's give it a few more weeks. And then let's short the market big time for a major recession somewhere around 4,300, 4,330 area. But right now, let's act like everything's fine. And let's just stay bull for now. The only reason I would be bearish is if we broke this trend line right here. So if we, I know it's hard to tell on my chart. If we start to get below this, right? If we come down, we could play puts that way. You can play puts for a couple days, but not really short anything yet. And when we do short things, it's going to be stuff like Tesla and Boeing and FedEx and these other weaker transport stocks because they're already lower. This is an interesting thing also, real quick, is you kind of have this area of liquidity here, right here, right here, and right here. So I would expect us to continue higher and just chop here for a few more weeks. It can get really boring. I wouldn't expect any large moves yet unless we gap up over 4,200. At this point, 4,200 is a target for us, which would be 417.50. That's a target for us. Even a spike of 4,200 and come fill this gap right here, or a 421.50 area. That would be a target. It probably won't happen tomorrow, but look for it next week. So we can start to fake out again, pull back, and we hit this trend line and then rip. And when stuff starts getting crazy like this and has $20 moves in a day, the top is in. So keep an eye on that. If you start, I do that every time. If you start getting bullish, then start thinking puts, basically. Because right now everybody's thinking we're overextended, the VIX is overextended. But as you saw today, the VIX started curling up and SPY started curling up. And VIX and SPY are not inverse necessarily, because that right here is when VIX bottomed, and then we shot up another 25 points. $3 and from 411 to 414, right? Because volatility increased, so we got bigger moves. That's what volatility does. It creates bigger moves. When volatility is around $18, you get moves like this that are just boring to trade and nothing happens, right? So keep an eye on that. Just because VIX is broken down doesn't mean, or starting to bounce, doesn't mean we can't go higher. We probably will go higher. And I want to short everything because I'm bearish. But at the same time, I would rather make money than be right. So we'll stay bullish for now until we break, until we break this pattern, because this was supposed to be, here's the thing, guys, this is important. This was supposed to be a double top, an M top, right? Come up, and then have an equal move down to this area. So if that was true, then we would have an equal move from there to there. Let me do it the other way. We had a move from there to there, was 50% move. Then that would get us right around 4,300 something. If we had an equal M top but upside down, right? So when they're looking at this, when we're looking at this chart and we're saying, okay, there's liquidity here, 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 and every time they have a big move, they have a big move down here, they had a big move up here, big move down here. So they could go either way. You can't really guess. But what you do know is when they eat up all this liquidity, there's going to be a big move, and it doesn't have to be down. You can have an equal move up, and we can put in a higher high. If I was going to guess where it was, this would be our number, which would make sense because you got some right here, some right here. So we could see 4350 area, 4360 area before the ultimate recession hits. Anyway, sorry I wasted your time. Thanks.